Hey, good morning, everybody. Happy Thursday. It's December 12th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. No music this morning because I'm running a little bit late over here, so I decided to delay the music until Monday. So let's talk a little bit about the markets here. One of the reasons why I'm kind of running a little bit late today is because I was waiting to see what the PPI number was going to look like, and it came in somewhat hot, somewhat expected on some of the metrics as well too. The month over month came in at 0.2, the year over year a little bit hotter, the core number also a little bit hotter. So when we aggregate and put together the CPI number from yesterday with the PPI number from today, we get a picture of what the personal consumption expenditures are going to look like next week, and that'll be coming out on Friday morning before the open. So according to this, it may be slightly on the hot side next week, but again, we have a Fed meeting next week. And interestingly enough, with the Fed funds futures market, we saw that, let me show that to you right now. The Fed funds futures for next week, now seeing a 94% chance of a rate cut after the meeting on Tuesday, Wednesday of next week. Now, if we go out a little bit further into 2025, see what is the Fed funds futures market looking at, trying to expect for rate cuts in the year ahead. We go out to May and we see that the May is really the first month that their Fed funds futures market is looking for the next cut. So if the Fed cuts next week, the Fed funds futures market says the Fed is on hold for the next 3 meetings until May. And then we've got the next rate cut coming in perhaps in September, down to 375. You can see that that's pretty strong over there. October, not so strong. So 375, somewhere between July and August, or July and September, probably the September meeting after that. So May, we pass on 2 meetings into September. And then we're looking at around somewhere between 375, 380 by the end of the year. So the Fed funds futures market is looking for a cut next week and then 2 cuts in 2025 to get it down to about 375 to 3.8 roughly. So it'll be interesting to see next week, after the Fed meeting is completed, the projections that the Fed is going to be looking at in 2025. So let's do a little bit of let's take a look at the last time the Fed met and had projections. Let me see here. That would be September. Let's take a look at that here. You can see where they were. So according to this, right, you can see this here. Hang on a second here. According to this here, you can see that the Fed funds futures in 2025, the Fed is looking at 3.4. It was 4.1 in June. So they're looking for an even lower rate. So it's highly likely this number is going to go up next week, right? At least the Fed funds futures market is saying that. And to be in alignment, to be a little bit less aggressive than what the Fed is looking for would mean that the markets are probably going to rally a lot more to get that back into alignment. And the Fed back in September was actually looking at 2.9, but 3.4, it's probably going to go up to about 3.7, maybe close to 3.8%, maybe even 4%. So I don't think if the market sees this next week, they're going to be all that pleased with a hike in the Fed funds rate here. But GDP, we'll see if that changes from 2%. They basically flat from June, 2% all the way across. Unemployment, they say, is going up to 4.4. We did see a rise in unemployment last week. And those numbers, PCE inflation, 2.1, I think that those numbers are going to go up as well too. I don't see that we're going to get close to that 2%. Inflation has been sticky for the last couple of months. certainly at 2.3 in 2024. I think that's a little bit too optimistic. I think that number is going to change, certainly with these last couple of numbers, readings from CPI and PPI in November and October with hotter numbers. I think that that number is going to go up, and I think these numbers are going to go up as well too, meaning that the Fed has room to pause a little bit more in 2025 and wait and see what the numbers look like before they start resuming their rate cutting mode. As Chair Powell has said on a couple of occasions, they really don't know where the neutral rate is, right? I know my good friend colleague Tom Lee from FundStrat came out yesterday and said he thought that the neutral rate is 2.75 to 3% on the Fed funds rate. I don't know if he's right or not. I don't think the Fed knows if he's right or not. I think the Fed is still searching for that neutral rate. It could be a temporary neutral. There's a new term for you. Temporary neutral at, say, 4%, which means that the Fed may cut one more time, two more times, and wait for a long stretch, a long period of time with that temporary neutral before they decide to resume rate cuts again. Now, where is that terminal rate going to look like? Again, they really don't know. It could be a new place. It could be 3.75. It could be 3.5. It could be 4%. We don't know. They don't know. They're waiting. They're just experimenting along with rate cuts here to see where the right spot is, and they don't really want to go overboard with too many rate cuts, because what's the problem you're going to have here? You're going to see inflation start running up and ramping up again, similar to what we saw yesterday and today. So we'll see what happens. The market, again, we're in a seasonally strong bullish part of the year in December, and that means a lot for the bulls if they're wanting to get long here. We do see a lot of times during this last couple weeks of the year, things are put in place and ignored. Like bad news is ignored pretty much. That ends up getting paid for in January, February. So you often see small caps rally in December. That's the small cap thing that Jeff Hirsch from Stock Traders Almanac talks about. The January effect coming into January, and we often see that the small caps rally ahead of that new month and new year coming in. So we'll see if that occurs. Now, more recently, one of the things that's concerned me over the markets here. Let's take a look at some of these numbers over here. One of the things that's concerned me here was the breadth, which has been terrible. ADBE, which is the accumulation distribution over here. The VIX has been basically trending down. We're at 13.5 over here. The ticks have been moderately red and moderately green. Put call ratios remaining low. These are the internals that I look at every single day. But the VOLD has been poor. It was good last week and it rolled down on Friday. This week has been terrible. This week on the ADD, we started up high on Tuesday and finished down. And on Wednesday, we had a strong day on Wednesday, but still the ADD finished on the lows of the day. So that's a concern, right? So we didn't see good, strong breadth all day yesterday. So that's, again, that's a concern. We have as well the oscillators. Let's take a look at that. So we see the oscillators over here, minus 13 and minus 58, right? So that certainly could be a problem going forward over here. If the markets don't have good, strong breadth, there's not really good support for the price action, right? Futures this morning, down about 14 handles. We were down about 10, 11 before the release of the PPI number. We lost a little bit of ground, gained a little bit of it back. Adobe had really poor earnings guidance last night. The earnings on the top and bottom line were good, but end of the day, we were the investors are disappointed here with the guidance. Tonight, we'll hear from Costco and Broadcom, a couple of names that I like. I had to do some Broadcom calls working. Yesterday, I had a really strong day with Google, right? Google, new all-time high. Amazon also hit new all-time high. And Microsoft was up strong. We're seeing a little bit of weakness in some of these names this morning. Tesla also is right at 420 here, so we'll see if that improves. All I can tell you is this: markets are a little bit shaky right now. You might want to keep on some insurance, some put options as well too. It's not a bad thing to have some put insurance on. I know you can certainly ignore the negative action and just wait for another day or two before the markets go green again. That is certainly an option, but it's a complacent option, and frankly, I would rather be stored up with a little bit of put protection and reduce the volatility in the overall portfolio rather than just waiting for that and taking a big hit and then hopefully the markets come back, much like this week, right? Monday and Tuesday especially, probably took a big hit and came back strong on Wednesday. Well, you can't hope for that to happen every single time, right? The market trends are strong, they're in place, they're bullish, but there's going to be those days where you have to be ready and prepared for the markets to go down. And today could be one of those days. So just be ready for that, like they were on Monday and Tuesday. Okay, that's going to be it, everyone. Have a great day. Have a great weekend. I'll see you guys all back on Monday morning. Appreciate everyone spending a little bit of time with me. And if you're on Blue Sky, I just opened up a new account on Blue Sky. Check me out, Explosive Options, Bob Lang, on Blue Sky, and please follow me over there. I'll be putting some new stuff on there as well too, along with more stuff on Twitter. And we have a great year coming up in 2025. Very excited about it. We have a couple of new services coming out, new webinars. We have the Leaps webinar coming up in January, and I'm very excited about that. That's our most popular webinar of the year, so you'll see some invites out there for that one. So appreciate everyone again spending a little time with me today. Please share this with anybody who think might want to listen a little bit and learn a little bit about the markets, and trade well today and tomorrow. And I'll see you guys all Monday morning. Take care. Thanks. Bye.